What's going on YouTube? So as promised, here's a trade recap for yesterday, Wednesday. So let's get straight into it. Alright. So yesterday we traded ES because I was bullish on the day. So let me give you my rundown of why I was bullish on the day. So the last SMT that we have seen has been this one down at the swing lows, and when we look at the swing lows between ES and NQ, we can see that NQ made a swing low and ES didn't, meaning ES is the strongest asset in this scenario. So we were anticipating for a move back into this bearish range. So let's go down to the 4 hour just so you guys can get a better understanding of what was happening. So in the 4 hour we had this bullish fair value gaps, which it appeared was like a point of interest for bullish traders. Also yesterday, in the midnight open, we had just saw price make numerous failure swing highs, which in that case is instances where there's just liquidity, you know what I mean? So there's just liquidity resting in these areas, and that was very, very, very nice. I haven't even looked at the chart, so don't mind me if they're a bit messy. Let's fix some things up. But yeah, price came into this 4 hour fair value gap, nice point of interest. And in the 4 hour we can see that was a strong push down, and the bulls were able to pick that up straight away. They were able to hold that bullish pressure and not let the bulls fucking take over. So let's jump into the 1 hour. In the 1 hour we can see more of those failure swing highs. So all this liquidity build up was just happening during the day, you know what I mean, just like significant. So these are all points of interest for those bullish buyers buying in this discount area. Also we had this drawn liquidity, which was the bearish fair value gap, which is here. I don't actually know why it was so high up just then, but it was that. So that was another contributing factor. I can't speak today, I'm fucking being retarded, of why price was going from IRL into ERL. Keep in mind this is rewinded. I have rewinded this. What later happened in the day was crazy, but we can get into that a bit later on. But yes, and again in this instance, what do we see? Inverse for fair value gap, good positive sign. The price is sweeping, and not sweeping, is changing its state of delivery. I can't speak, I'm so sorry. I've had a long day, I've had a huge day. But yeah, that was a big contributing factor. Let's jump down into the 5 minute. I didn't trade the 15 at all, but this is my trade. This is what I took, guys. So in the 5 minute you can see it pretty well. What happened here? Okay. So first of all, changing the state of delivery, great point to start. Break a block, another great point to start. So these are just all contributing confluences to confirm that we are trading bullish. Again, bullish fair value gap, breakaway fair value gap. This is 2 breakaway fair value gaps, because price never returned back into this, you know what I mean? Price never returned into this or into this and then all like that. It was able to hold that much bullish pressure, and again, most likely because of all this buy side liquidity that was resting. So yeah, basically I did take the trade on I saw this breaker block we made, but I didn't enter it. I don't. You may ask, oh Nick, why didn't you enter it? Why did you? Because I didn't see, even in the 1 minute, we don't see any retracements into these fair value gaps. You know what I mean? Nothing into these fair value gaps, which was like, you know, I was a bit apprehensive about the fact that it wasn't going into a discount period. Look, if I was a bit more experienced and I had a bit more confidence, I probably would have taken the trade there and covered myself here at the breaker block, you know what I mean? And taken my profit at one of these highs. And that would have been a 0.42%. That would have been crazy, a 3.52 risk to reward ratio, insane. But what I did instead was I waited for a consolidation. I waited for price to come into this. So as you guys can see, this is the order block. Nice order block where price did mitigate a lot of times. I'm not gonna lie to you guys, this was very choppy. It made me quite nervous, but you know, you gotta stick to your trades and stuff. I should have taken a 2R, and I should have placed my take profit up here, but at the time, you know, it was getting late. I was slowly slipping out of like the time where I'd see my profits be taken. And I also, you know, there was a high chance that we were going to go into this buy side liquidity invert fair value gaps. Sell side fair value gaps, which we didn't. We continued to sell up. But yeah, basically that's why I took my trades. Again, it's pretty simple. Like, that was basically what I took. You know what I mean? IRL to ERL, and in the lower time frame, we've seen something like this. So to say this is just a high time frame, we're just seeing these. Boom, boom, boom. A sweep. And if anything, this was a lot more aggressive. It was almost to the point where like these didn't even like come back down. It was so aggressive. You know what I mean? So yeah, like all these points, just liquidity build up. And like once you get to understand your liquidity, where it's resting, you can start to like realize, oh, okay, so the market's going here. Let me figure it out. And it's something that I will explain in the future, how you can see your drawn liquidity. You know what I mean? Let's just quickly talk about what happened after that. So let's just jump off exit replay. How crazy was this? Little Trumpy. This man right here, he's crazy. Did you see the tariffs? The market did not react well at all. I'll tell you that right now. SMT has been gone. We are now continuing a bearish order flow. Yeah, guys, I don't know. I think that some bad for the bulls and people that have money in the market and the whole economy itself. I think we're going to see some rough times, because I reckon that's our next move after that. Sorry. I think that's our next move. Take out, look for the next liquidity, which is this swing low. So yeah, I think that's what we're doing. As you can see, in the daily, we're seeing some up candles, which in a sense can be seen as manipulation, and it's a strong sell-off. It's a strong bias to be having, but you know, you gotta think outside the box. Like, what was it? 3.7%, that's insane. NQ, the same sort of deal. Like, I didn't trade NQ because it was a weaker asset in my bias. S&T gone, new swing low of the week, crazy. But yeah, it's just, that's kind of the weekly range we're working with right now, you know. That's a weekly range. How crazy is that? Again, I'll be staying clear of the charts because it's a day before NFA, non-farm employment change, and Big Man speaks also tomorrow. I think for the rest of the week, we're most likely just going to see something in here. Some bullshit in here to just generate liquidity. But yeah, that's pretty much basically it. So they would make, how much did I make? Like $300. So right now at this current point in time, I am up $370 in my account. So we're gonna get there. I'm getting all the low hanging fruits, you know. It's not a race. Those people that like can get crazy gains so quick, like hats off to you. But personally, it's just something that I don't see being sustainable. Look at this, guys. Look at this. What is this? Just liquidity build up. Again, most likely for it to be undrawn liquidity for the day. So yeah, I'm sure that I'll do a video on, you know, how you can identify all this sort of stuff and, you know, make your trading so much, improving it so much. But for now, that's probably what I'll just be sharing with you today. Yeah, make sure you're journaling. Peace.